Well, Ren, we are halfway through the year. We've just kicked over into July. So we thought we'd do a bit of a wrap just to remind ourselves of where markets are at. There's been plenty going on.
Yes, we're calling it the mid-year awards, but this is really just a reflection on what has happened in the past 6 months.
Yes. So let's start with the markets. I guess to sum up, it's been a pretty good 6 months.
Surprisingly good.
Yeah. The S&P 500, the major market over in the US, is up 17%. The ASX 200, our market here in Australia, is up 2%. The FTSE in the UK is up 6%. The StockX 600 is up 8%. That's mainland Europe. The Nikkei is up 23%. That's Japan. The Hang Seng is 5%, which is Hong Kong. And the Nifty 50 is up 12%, which is India. So globally, we are seeing major markets up.
Well, my big takeaway there is nothing is down.
Did you look at Brazil?
No, I'm not saying that no market in the world is down. I'm saying you just did a roundup of seven major markets, and none of them were down.
Yeah.
So I think for a lot of people feeling cost of living pressure, reading a lot about the macro environment and interest rates aren't being cut and inflation is still high. People, you're looking at politics and you're seeing the rise of the far right in France. You're seeing Trump looking like he's going to win. You're seeing Biden forgetting a lot.
Who he is.
You would think that economic turmoil, political turmoil would see the stock market fall as a result.
Yeah.
But this is the classic example of why it is near impossible, I would say is impossible, to time the market because it is just so unpredictable.
Yes.
So that's the first reflection for the first half of the year.
So let's have a look at some of the best performing stocks now that we've looked at the markets. And we'll start here in Australia. Now, this is just out of any listed company, it's Macro Metals.
Yeah.
Now, this company is up 1,200% in the last 6 months. It is a small micro cap. It's only got a market cap of 94 million. I'd never heard of it.
Well, what it does, it owns an iron and steel project in Nigeria. This is the classic Australian mining company, like explorer or junior developer in exploring somewhere far from our shores. Yeah. So we said, all right, maybe let's, well, you know what? Congratulations if you invested in Macro Metals. You've more than 10 bagged your money in 6 months. But we said, let's have a look at companies over 500 million. Where have been the best performers, the best stories. And there are some notable names in here. Number one, unsurprisingly, Drone Shield, up 353%.
I was at a concert on the weekend and where was it? Was it a concert? Anyway, I was somewhere and someone random just started talking to me about Drone Shield and I'm like, okay, here we go.
Okay.
It's on. We've hit retail.
Well, I mean, yeah. I'm more surprised that someone recognized you.
No, we were friends, I think.
Oh, right. Okay.
Yeah. I'm trying to remember where it was. But anyway, it was surprising that they were talking about Drone Shield.
Yeah.
So I'm like, yeah, it's hit mainstream.
Is that a sell signal?
It's hit mainstream. No, I reckon it's a no.
Okay.
No.
All right. Some of the other notable names are Mesoblast, up 225%. Clarity Pharmaceuticals, up 157%. Superloop, up 136%. And Zip, up 135%. Now, we should shout out that if you haven't listened to our conversation with Michael Frazis, it's worth listening to. It's in the Equity Mates feed now. Clarity Pharmaceuticals is now his largest position in his portfolio. So if you want more information on that one, go listen there. But some notable names.
Yeah, good to see. A couple of them we've spoken about on the show. Let's turn to the worst performers, though, and hopefully none of these are in anyone's portfolios out there. This is, again, above a 500 million market cap. So the worst performer is Liontown Resources, the lithium miner that had such an incredible run last year. Almost got bought out and then got absolutely foiled by Gina Reinhardt coming in and buying up 9.9% or whatever it was. Unfortunately, it's down 46% year to date, closely tied to the lithium performance. Strike Energy is down 41%. Domino's Pizza down 39%. IGO down 38%. And Sims down 34%. So a couple of recognizable names there. Yeah, pretty heavy when you consider that the ASX is up 2% year to date.
Yeah. So a quick look overseas just to round this out, and then we'll get into some of the biggest surprises and worst investing takes. Best stock in the US above 500 million market cap. You might be thinking Nvidia up 156%. You might be thinking Supermicro, that was up 187%. But no, it's GeneDx Holdings up 890%.
Wow.
So almost 10 bags. I had a look at it.
Gene therapy?
No, like gene not diagnosis, like mapping where hold on. This is
like you can find out your ancestors and stuff.
No. More you can measure your own genomes. You can like map your own. You can sequence your own genes.
Gotcha.
That's what I was trying to say.
Gotcha.
Yeah.
Gene sequencing.
Yeah.
Okay, so it's up 190%.
No, 890%.
Sorry, 890%.
And then the best stock globally, which is actually still in the US, but it's traded on over-the-counter markets, Olavida International up 1,432%. It reported a 3,000% increase in revenue year on year. It kind of seemed a bit spivvy, I've got to say. Yeah. It was like, it's like water-free cosmetics.
Water-free?
Yeah,
right.
Which, is good, but just the vibes the company was giving off when I was reading about it, I was like, But anyway, people have more than 10 bagged their money on that stock. So there's some of the numbers and some of the names, but let's get into what has really caught our attention and what is worth paying attention to for the next 6 months.
The biggest reflection over the last 6 months has been how wrong predictions have been.
Okay.
How like blatantly wrong, but also how ashamedly, is that the right word? People are just changing predictions on the spot.
Oh, yeah. Classic. Yeah.
Classic.
Yeah. Well, give us an example.
Okay. AMP chief economist Shane Oliver.
We're calling people out.
He predicted 3 rate cuts this is in January.
Yep.
Predicted 3 rate cuts in Australia in 2024, specifically calling out a start in June. So we would have already had one by now. He said that rates wouldn't go down as fast or as far as they had risen in recent years, but was very confident that we would see 3 this year. Now couple that with the market expecting 6 rate cuts in the US, starting from as early as June as well, and flowing through until the end of the year. Now, if you were sitting at the start of the year and making investment decisions on that and really thinking about how the year's going to play out, like how wrong have those predictions been in a 6-month period? Yet look at the performance of the market. Look what you would have missed out on if you hadn't have invested, or if you, I think just you can't pay attention to these predictions.
Yes.
And I just find it fascinating that some of these, it's their jobs to make these calls, like chief economists of banks, et cetera, et cetera. And I'm...
Yeah, my motto with predictions is people don't make predictions because they know, it's because they're asked.
Yeah, exactly. Yeah. But like they're paid to do it.
Yeah, yeah. Well, no, he's paid to be an economist, and people ask him for predictions.
Yeah, but is that feeding into like...
Yeah, I know.
You know what I mean? Yeah. But yeah, I think where to from here as well, like I think if you look at what people are expecting to play out over the next 6 months, particularly here in Australia, it's going to be fascinating to see where we finish the year.
Well, I expect, and this is a prediction, so it's obviously not worth the paper it's written on, but I expect we'll end with 1 rate increase, and that's probably...
At least,
it.
I reckon.
Yeah. You wouldn't expect we're going to be down from here.
No way. Not a chance. I also think it's been interesting, everyone's saying huge divergence in the Magnificent Seven at the start of the year. Sort of has played out in part, but some of those big tech companies have just continued to rip. I think if you look at people also saying Nvidia was done, it's a bubble at the start of the year, up 157% year to date.
Still could be a bubble.
Still could be, but like I think what I always have in the back of my mind is, I think if maybe you'd said it or someone along the line, is that trends in markets always last a hell of a lot longer than you think. So if you were to, it's just interesting to see how it's all playing out. What about you?
So that was one that trends always last longer, and the amount of times people will have asked, have I missed Nvidia? Have I missed Drone Shield? Have I missed the recovery in smaller tech? And all of them just double again from when that question is asked. The challenge is at some point the music stops, and you've got to be mindful of that, have stop losses, or keep a close eye on some of these fast moving names. But God, trends last a long time. I think perhaps not my biggest surprise, but something that is notable is crypto falling away. Yeah. There was just like, and look, I bought into this as well. There was just like an irrational level of confidence that there would be a halving, there would be a small dip, and then it would rip again. And maybe it will. Maybe I'm just too early on this, but it certainly hasn't.
Well, the crypto bulls will say that the sell-off that we're seeing now. So I think Bitcoin's down about 25% from its high a couple of months ago, or whatever it was. And the Bitcoin bulls will say, oh, it's playing, it's meant to do this, blah, blah, blah. But I feel like they were expecting a run a lot earlier than it is now. So, I do agree with that. Putting it on notice.
You're putting Bitcoin on notice.
I'm putting Bitcoin on notice.
All right. Well, we'll pay attention to that. And I think, my biggest takeaway as we sort of look ahead is the best time to be in the market was 20 years ago. The second best time is now. It's like, if you were an index investor, chances are you're up despite all of the reasons that you'd think the market has fallen. If you're an individual stock investor, there's been so much opportunity in growth recovery, in a number of, more stable value stocks doing well. Like, if you're waiting on the sidelines, probably think about your investing strategy.
Yeah. And if you're overexposed to the ASX 200, have a look as well.
Yeah.
It's one of the weakest performers.
Equity line.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.